in. But with that, let's also talk about how all of these cues that we just spoke about from the global markets impact us and all of the individual stocks that you should keep on your radar today as well. We have Reema, Surbi and Nigel joining us with the trade setup this morning. Guys, a very good morning to all of you. Reema, let me come to you first. The screen that we have, right now, whether it's Asia, GIFT, Nifty, all looking very strong.
Yes, absolutely. So while the US markets closed flat, Asia has picked up a fair bit because that big event is now out of the way. For our own markets, the good part in yesterday's trade is that there was finally some momentum, some green on the screen on the index. After we went precariously close to the 20,000 mark, the markets were consolidating. We hardly saw any change on the index, but finally it appears that the index started to move and the Nifty came very close to that 19,800 mark. Today we've got the July expiry as well. So can it help push us higher towards, once again, closer to the 20,000 band? It's going to be about individual stocks. So we've got a lot of stocks to react to in terms of news, whether it's Reliance because of the Geofin BlackRock, Tech Mahindra's earning, Axis Bank's numbers, which was slightly lower than what the street was anticipating. But on the other hand, you've got Colgate, Tata Consumer. So the activity is going to be more on individual stocks. But the index finally appeared to have woken up yesterday and made a push. And the big cue today is going to be the July expiry. In terms of flows, both the FIs and DIs were buyers in the cash market. The FIs bought 970 crore while the DIs bought 470 crore. Back to you.
Okay, Reema, thanks a lot for laying out all of those cues for us. Let's also talk about some of the individual names that could really be in focus in today's trading session. Surbi is here with the list. Surbi, we're in the thick of the earnings season. A lot of the Nifty earnings post-market close yesterday, and some of them really not looking too good.
Yeah, that's right. They're not looking too strong. Let's start with Axis Bank. Now, operationally, it was a weak quarter. The net interest margin is the lowest in the 3 quarters. And sequentially, operating profits have declined by nearly 4%. Techem, again, a big miss. The dollar revenue was down 4% sequentially. And the EBIT margins have come in at 6.8% versus 9.6%. Tata Consumer, it was an absolutely in-line result. The revenues have come in at 3,741 crores. And the EBITDA has come at nearly 545 crores versus a poll of 535 crores. Colgate, it was an all-round beat. Revenues have come in at 1324 crores and margins have come in at nearly 32%. Dr. Reddy's, again, a top-down beat. The revenues were up nearly 30% and the EBITDA margins have come in at 32% versus 34% same time last year. Apart from that, M&M and RBL Bank will be in focus because M&M has said that they've acquired 3.53% stake in RBL Bank and also they may consider raising stake in RBL further, but they won't exceed 9.99%. And lastly, RVNL will be in focus as government announces OFS for the company and they may sell up to 5.36% stake in the company.
All right. Thanks for that entire list of stocks, Surbi. We're going to watch for all of these in today's trading session. Finally, it's over to Nigel. Nigel, how are things looking on the F&O side?
Well, it's the expiry day, and if, in all probability, by the looks of it, we're definitely going to be ending in the green. So it'll be the 4th straight series where we end in the green, and that's the first time in the last 6 years or so. So a bit of record breaking today is what we're bracing for. What do the FIs do? Well, yesterday they added more longs than short positions in those ratio of close to around 3 longs, 2.5 longs odd for every 1 short position. And now the long positioning is at around 67%, but luckily it's not at that 80-85% odd, which tells you that the market's getting a little too complacent. They wrote more puts than calls as well, and I'll read that positively, getting into an expiry day. And the most active strike yesterday was around the 19,750 put. It added more than 45 lakh shares odd, premium at around 44 rupees. Given that that was being written, well, you're looking at the near-term support at around 19,700. And at the 19,700 strike, the PCR is at around 2.8, telling you the number of puts that have been written are way more than the number of calls and gives you some confidence that that level will hold out. So on the downside, 19,700 becomes a crucial support. On the upside, yesterday we went to around 19,830 and from there we did see some selling. So today, the bit of a resistance zone comes in at around 19,840. Now, the GIFT Nifty suggesting a 50-point gap up. We need to hold on to those levels. In fact, the 80-point gap up. So we'll be starting above yesterday's high. We need to hold above those levels and then, in fact, maybe brace for a bit of a move towards 19,900. But holding on to the gap up is going to be most crucial. Back to you.
All right, let's see if we can do that. Nigel, thanks a lot for laying out all of those cues. That is the trade setup for today. But with that, we do need to get into a short break. On the other side, like we've been telling you, Axis Bank and Tech Mahindra posted their Q1 results. So we're going to bring you the fine print in just a minute.